Hi, this is Steve Schwartz with the RQ TradeLAB review for the day. I'm with Edward Preston, my colleague and friend. It's October 30th, and EP will be giving us the rundown from this morning. Thanks, EP. Here you go.
All right, thanks, Steve. Okay, so I'm putting up the 4 trades up on the screen here. Just bear with me. They're going to represent what we did in the TradeLAB today. Let's take them one by one. First of all, let's talk about our market sentiment. What was the stage that we had today as we went through the TradeLAB with y'all? Well, first thing we had, the only thing we had was the stage 4 the entire day. This white line over here represents the beginning of tea time, so from 8 to 11, looking for some trade opportunities. We're in the last leg, last half hour right now. You can see that we've stayed above the in the bull territory on both the Treasuries, 10-year notes, and the S&P the entire morning. So we've been in what we call conflict, which is a good thing, bad thing. Good thing is we can limit the number of markets that we trade. When I look at a selection of markets here at the Rios Quant website, we got about 18 that we scan, but we don't trade all 18 of these every day. We start to scan and just filter based on the market sentiment. So natural gas and corn stand out with the color in red, and it turns out that those were 2 of the 7 markets that I would really focus on today. The other 5 would be gold and silver being what we call wild cards, natural gas being an independent, soybeans, corn, and wheat would be the last grain I would look at in terms of being independents. So that's the good news. The bad news is those of you that like trade stocks, very, very limited selection, and any trade you take today is going to be a high risk. I make a big point of that because I actually did one today, which was the Nasdaq, which I'll talk about here in just a second. So let's go to the 4 markets that we participated in. The first one out of the gate was gold. If you haven't taken a look at a silver chart lately, do so, because gold had a tremendous run-up. I'm sorry, silver had a tremendous run-up, and so did copper have a tremendous run-up in the overnight session, or I should say in the London session. So let me put this on first of all, let me put this on a different template, because I based my entry on a couple different things. We're looking at our channels, we're looking at the zones, and I want you guys to take note of what was happening. I got to put 8 o'clock back up here. 8 o'clock represented by that white line. We were breaking from the first zone here into the second zone. And we started producing some 5 accelerators back over here after the market settled down after that first spike. Note how we were spiking with 3 accelerators. Those are overbought conditions. But when it came back down over the course of about 15 minutes, it started producing some 5 accelerators. And those 5 accelerators tell us that we have high momentum. So one of those 5s kicked out right here, and I bought it. Another 5, more momentum, up, 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 up. Market at 9:30, the stock market opened up right here. And I don't have the channels on right now, but there was a channel that was right there at the time of the stock market opening. That was a no-brainer for me to look for some additional momentum added to my position, took profits off 50% into the zone, basically almost matching what we did earlier with the first attempt. And I had profit targets up at the top. I was looking to take out more money with the second unit, but you can see it fell back down, and what I did was basically manage the trade so I wouldn't take a loss on the second one. So when it came back down close to about a break even, I lost about 20 bucks on the second one. So that netted about 200 bucks on that trade. Second trade today was the natural gas. Natural gas got in based off of, I believe again it was based off the channels. I can't remember if it was a 5-minute time frame or a 30-minute time frame. Let me see if I can find it here. Looks like it drove back into the bear territory. We did have a channel in there, but I believe I did this, guys. Sorry for bouncing around, but I believe it was just off of a 5 accelerator prior to the entry here. I can't remember now that I go back and look at it because we've had so many different looks. But market basically driving from bull into the bear territory. There was a 5 accelerator inside here, There was momentum that was building up. There was another chance of getting in, another 5 accelerator. This is showing that this momentum is building. I sold into this market again, adding to my position based on the channel, took profits at 75% of the way into the zone, and again, as the market came back up, I protected the profits that I had, not giving anything back and taking about 120 bucks out of that market. Then we went over to the Nasdaq. Let's do the Nasdaq first. Now the Nasdaq, as I said, we've been in conflict all day, so looking for this market to push higher. It was the leader. Unfortunately, the Treasury is staying up there with the S&P, and you can see this happened right before the 10 o'clock number. The stock market is like the balloon just popped and the air just came out, and it's going to be hard to charge up any higher when you're in the secondary zone, especially when you're in conflict. So what do you learn from this? You learn from this that this isn't a smart trade. This is a very, very high-risk trade. Secondary buy zone, this is the first buy or the first bull zone. This is the secondary bull zone, and when you've got that conflict I talked about, this is going to be an extremely high-risk, tough way to make some money. Put the brakes on when it came back down about 50 bucks underneath the opposite channel, yellow channel there, and that was a loss. The last trade today was crude oil. Try to get in with the report that we had today. And let me just bring this back. We had a report out here, just came out about 10 minutes ago, the inventory report. Again, you can see the channel. Again, a high-risk trade. Another trade opposite of the Nasdaq. We're in conflict. Crude oil is not one of the independents or wild cards. I'll do this trade every single time, though, if we have a report. This location was fine. I just went in with limited risk. In fact, I recommended here that you could trade a mini to even risk that, put that risk even at a smaller amount. So I did one, and it looked like we were going to survive the flush out. I had to stop 100 bucks above the opposite. It looked like we were going to survive. The market came back down, but just in the last 5 minutes, it came right back up, stopped us out. Now it's kind of right back to where it started. But just kind of going sideways, kind of like the stocks are. Be very careful today. We are going to have the FOMC later in the afternoon. Highly recommend that you guys stay out of the market this afternoon. And we'll be back in here tomorrow morning here at the TradeLAB at 8 o'clock, and that's today's trades. All right, that's a wrap for me. Steve, you going to climb back in and finish up? I can see your screen coming back into view, but I can't hear you. Your mic is muted. There he is.